Let's bring in our next guest. We've got Jerry Parker joining us, CEO of Chesapeake Capital, here to talk trends and existing market conditions. Jerry, I want to begin where we started off this morning with big tech in focus, with Microsoft's second quarter results due out today on the close. And after some of the selling we've seen in July, I'd imagine the bulls are looking for this one to kind of come to the rescue here today.
Oh, yeah, there's a lot to look forward to, I think, in the market now, with the interest rates especially kind of looking like they've sort of bottomed, and the trend may be drifting slowly to higher bonds and lower yields. So that's really, I think, a precursor necessary for everyone to feel good, and hopefully the earnings will match.
Yeah, it's interesting now that you say that, with that shift in terms of yields, expectations, Fed going from a hiking to kind of pausing into now cutting cycle. And ultimately, you'd expect to see some of the existing trends that we've seen, right, kind of start to diminish a little bit. So things can't last, or conditions don't remain as is forever.
That's right. What a devastating situation we'd see if rates went higher from here and the bonds sort of sold off.
Yeah.
But I don't think that's probably going to happen. It doesn't look like it. I do think maybe a surprise is going to be the dollar. I think the market is sort of showing us that maybe we're going to see some dollar strength. Maybe there's been some more anticipation of dollar weakness, but I think maybe may see that trend in the dollar perk back up. It's just been sideways for so long.
Jerry, you know, we usually approach the trend following conversation from kind of a higher level, right? A more sort of experience, more for someone that's had a bit of time in front of the screens. But for someone who's just getting started out trading and starting to kind of show interest in trend following, where would you steer them in terms of gaining more knowledge and getting that firm foundation, that fundamental understanding?
Oh, there's lots of resources out there for to learn about trend following and turtle trading, where I came from. Mm-hmm. The turtle trader rules are out there. I would say get started looking at charts and the moving average crossover, the golden cross, 50 crossing over the 200. That's a really good way to sort of get your feel for what kind of trends are out there. Does it make sense to play for the long-term trends? And I think it does. And you'll see these trends sort of pop up all over the place in the different stocks and commodity charts that you can scroll through. I love barchart.com. It has all the tools for someone just starting out and experienced.
That's a throwback. I haven't heard that name mentioned in a long time, 10, 20 years now that I think of it, barcharts.com. I first started looking at charts on that site. Talk to me a little bit about in terms of size when one's getting started, right? Because I always make a point. Paper money is not the same, I feel like, right? You don't really have that emotional aspect associated with it, but you don't need to be trading hundreds of shares, right, to kind of get your toe wet and sort of experience and start to try and participate in trend and again, some of the opportunities that the market presents.
Exactly. Richard Dennis told me the two most important rules were, have a strategy, have a system and a set of rules, and follow those rules. And then number two is to trade small. You're as bad as you're ever going to be when you start out. You got to pay this market tuition. You got to take your lumps and lose some money. So starting there with some stocks and try to survive. The whole goal for trading over a long period of time and investing is survival. Take those small losses and don't be too eager to get out of your big winners, and have a systematic approach with good rules that allow the rules sort of dictate that you're going to hang on to these trends. Like we've seen a lot of big trends recently, Bitcoin, Nvidia, gold, still in a decent uptrend, all of these markets, and you're just hanging around and not being too eager to short circuit these long-term trends.
Jerry, in terms of positioning yourself and trying to take advantage of some of these longer-term trends, I know you try to avoid micromanaging trade, right? Overthinking trades once you're in them. I like to think of that as sort of just let the market do the work for you, right? When you're positioning with the trend, that's the luxury in many ways of trend following, is that you're not out there trying to pick up nickels in front of a steamroller, as I like to put it. But when you get in, are you all in at once, or you kind of scale into an order? Like, how do you approach that in terms of initiating a position?
I think it's good to have multiple entry and exit points. So a couple of different set of rules, a shorter term entry and exit and a longer term entry and exit, at least two. So you can diversify your entries and exits and play those odds that, sometimes the trend is going to reverse and then go lower. So you'll be happy that you got out quicker. Then sometimes it'll reverse and start back going higher. So then if you only got out of half, let's say, so you want to give yourself some different different odds and different opportunities to play these trends.
I like that, and somewhat cliche, but I always used to say, right, you want to enter the trade based on a shorter term, risk based on a shorter term, with your reward based on the longer term ultimately. So get into that trade with a short term risk component. If you get stopped out, that's fine, right? Learn to like to take small losses, but if you can, then you start to look at the trade through the lens of kind of these longer term charts. And if you find yourself positioned with that longer term trend, why not stick with it? I'd imagine also, Jerry, commission-free trading, right? Change the business, change the aspect in terms of, like, for smaller traders like myself, retail traders that want to position with trend and get involved and kind of learn a little bit. It sort of opened up the doors in many ways.
I hope so. I hope people don't use that as a good excuse to trade more short term, but they take advantage of trading longer term systems, which are going to have less commissions and market slippage, and they take advantage of that rather than doing too many active trades. I don't think it's a good idea to pay attention to patterns or markets that are failed to make a new high, or ascribe sort of personality to what's going on in these markets. Look, just hold on to it. You've got if it's a winning trade, it's a superpower. You can hold on. You're playing with the market's money. And like you said, these small losses, learn to take these small losses, but then also force yourself to get right back in when the market goes right back to the highs. That's another thing that's very difficult to do. You were wrong, but you got to get back in.
Some of the best traders, Jerry, I've seen have been able to admit that, and quickly. You know, they go, hey, this was, or we got out, now, you know, we need to get right back in immediately, and not hesitate ultimately and second guess that thought process here. That may be kind of intuition or sort of sixth sense in many ways. Jerry, lastly, establishing a track record, right? I mean, that's what you're trying to do as a new trader, sort of over a long haul, not necessarily this week, this month, this quarter. We're talking years ultimately, right? A cross section of your trades. Showing and representing that positive expectancy, and ultimately just kind of building on that over time, over the years.
There's nothing more important than protecting that track record and having it and building up over those years. And so you can use that in the future to show people what you can do. Part of what you can do is your ability to trade well and have a good approach. And the other part is being disciplined. And that's so important to us. I just wish I would have been 100% disciplined in my whole career. My track record would look so much better. But that's the most important thing. Follow those rules as long as you can.
Well, when you put it like that, Jerry, it's pretty simple in many ways, right? So maybe it is truly us that's just overcomplicated and creating a situation where we are our own worst enemies in many ways in this scenario. Hey, Jerry Parker, those are words of advice that we're going to follow here, and from one who knows. Jerry Parker, CEO of Chesapeake Capital. I appreciate you joining us here and sharing those thoughts with us this Tuesday morning. Great conversation with Jerry. Now.